Good morning, everyone, and welcome back to another episode of the Broker Breakdown. It's odd recording back-to-back days, but I'm just trying to get caught up with our episodes and everything. But Mike, we have a new topic that we actually have never really talked about on the podcast, which is funny because we find that there's been a lot of trends and kind of hot topics in the world of insurance lately. But this one actually, again, might not be one that consumers might see all too often, but again, something that we do see a lot, especially in the last year or so happening, more on the mergers and acquisition side of brokerages.
Yeah, that's been a hot topic now for a while, but it doesn't get a lot of general public light because obviously you have to be kind of within the industry or have some insight or kind of want to look into that, right? So the average person wouldn't really know about it or even hear about it. So, I mean, me and you always regularly, myself, probably at least weekly, you maybe even more than myself, we check out Canadian Underwriter, right, all the time. And I mean, there used to be a whole section on the website for M&As, as they call them, mergers, acquisitions. Now it's just more of like the headlines and the news stuff that pops up through different articles. But oh my goodness, yeah, it's been a huge thing, I think, in all industries, but insurance has been no different in that space, especially with the broker side.
Yeah, like I said, it's a very hot topic right now. I think it will continue to, as we continue to kind of globalize, I think, unfortunately, you're going to see those smaller businesses really kind of take a hit. We saw that during COVID where, unfortunately, smaller businesses had to kind of shut down. And I think that's a big factor. But again, people just age and they get to the retirement time. And again, if they can sell their book of business and make some money off that and then kind of go into retirement with that big lump sum of money, like, why wouldn't you do that, right? So there's a bunch of different reasons why I think offices kind of sell or kind of move on. But again, like I said, it's not just one kind of factor. I think there's a lot of kind of factors, life factors that kind of go into that.
Well, one of the things too that not everyone's done in more recent years is that the traditional old school kind of broker model, like the bricks and mortar, have your office or two offices, run it as almost like a family operation. That would only continue on working if there was proven succession plans through either kids or maybe buyouts or, other family maybe coming in or different partnerships. And I think, as you've kind of mentioned, as companies ended up getting bigger, you would see like more of that capital. So it's like, okay, we can actually sell our book for a decent amount. That ends up being their retirement. So you saw a lot of guys in their 60s and 70s that were doing insurance for literally their whole life, instead of having that next plan of how do we kind of how do we move forward, right? How do we keep this business going? It was, I gotta sell the book and up to XYZ insurance and kind of that's my retirement, right? So if there was no succession plan in place, it made sense because there was other brokerages that had the capital willing to invest in them.
Yeah, like a few weeks ago when I was up in Muskoka, I was golfing, and I actually was golfing with an older gentleman, and he actually told me that he was an insurance broker for like 60 plus years, and he just recently sold his office. And yeah, he was just kind of telling me like one of the factors was it was just, again, he was getting older. It was just kind of time for him to get out of that industry. He was in that industry for a long time. But again, he just said there was a lot of politics that go behind it, which again, we won't get into. But again, he just kind of was like, you know what? It was time for me to kind of move on, and I moved on. So kind of just a life moment that he was just like, you know what? I'm ready to kind of let this go and continue on my life and go on from there.
Yeah. And that is super valid point if that's what you're looking for as well, right? A lot of people want that decent retirement plan. And if your book has done well for you over the years and is built up and is valuable to somebody else to purchase out, then that's a great opportunity, right? It's one of those things, though, that as more and more people kind of trend towards that I guess, opportunity where, you know, it is just the plan is always to sell, for example. The plan isn't to say who's taking over, who's the next step, how do we continue growing this brand. More and more of those acquisitions and mergers happen. And it gets into what maybe the meat and potatoes of this episode's going to be about. But how does that affect the client at the end of the day, as well as what are some options people will have, and all of the other, I guess, pros and cons. There's lots of pros and cons towards that kind of stuff. Depends on how you view it. But yeah, what kind of entails for the client at the end of the day on that?
It's no kind of secret that we're in an industry that, again, I feel like our average age, like if you kind of go around and look at brokers and agents, the average age is a little bit higher compared to other industries. And there was actually an article on Canadian Underwriter a few years ago that I read. Like when I first kind of got into the industry, I remember they were saying that in the next 5 to 10 years, you'll see the insurance industry really, I guess, change, because a lot of older brokers are going to end up retiring, and there's going to be a lot of kind of chance for new business to go to younger brokers. So I feel like we're kind of just getting to that point, like maybe in the next year or two. Maybe not within our company, but I do find, like, if you look at other companies and stuff, I do find like a lot of other brokers are older. And again, anyone that I've talked to, I've talked to older brokers, and they said, you know what, I want to be here for maybe another 2, 3, maybe 5 years max. But after that, I want to retire and kind of enjoy the rest of my life. Right. So I feel like that's another big factor that's going to play into it, where, again, people are just getting to that retirement age and they just kind of want to move on with their lives and enjoy their lives. And you're going to see a lot of kind of change where younger brokers are probably going to come in, because obviously you have to replace people retiring, or else you're not going to have anyone working in this industry. And it's really like any other industry. We've talked about it before, where like mechanics, for example, like people just aren't getting into being a mechanic right now. And mechanics, again, an older industry, people are retiring, people are getting out of it, but we're not replacing the old mechanics with newer mechanics. So I just hope that we don't get to the point like that in insurance. Maybe from my side, I would love that, because then I get more opportunities and more clients, myself and Mike. But to the point where it's not just like we're losing like 80% of brokers and we're only gaining maybe another 20 or 30%, because then that kind of adds a lot of pressure onto existing brokers. But again, that's kind of a factor that I think a lot of people overlook, is that people age and people want to retire and need to retire. They can't work forever.
No. It's about filling in the back end, right? With newer people that are not only willing to put in the time into the industry, but also kind of that's what they want to do as a career, right? A lot of people have choices. They want to hop around and do different things. I mean, I've now been in the brokerage space for this year's my 10th year. No intention of going anywhere else, really. This would be the broker channel is what I would love to do my entire life, to be honest. It'd be a cool career to be in, and kind of adapt and change through that, right? And have one of those kind of legacy careers where you've done that for your entire life and adapt through. And there's a lot of money to be made, right? Everyone needs insurance. Home and auto insurance is going to be something that is needed for a very long time. So it's just, getting into it's very cool. What else? There's something else I wanted to mention on that too, which was back to just why I think some of the reasons why people don't have that section plan in place there, James, too, is being able to kind of revolve around the digital times, right? So you get older brokerages that have worked on like the old rate book days, manuals, kind of where they're looking back, and it would take a lot of time to put together quotes and policies, but the whole model was build up a book of, whatever, a couple $1 million,
business, basically, right?
Well, yeah, but it was more. It was more, I think, at a point where it was sustainability. It wasn't necessarily the growth model that we see now with
technology is taken that in a different way, right? Because before, even when I was starting, man, I remember when I first started where I was at, we were still doing signed applications in office. Like we did not have eDocs signed. So I had to physically get people to come into my office and sign documents. So if they weren't within a walking or a driving distance, I was losing that business. So I feel like for older brokerages where that's all they've known, again, it's tough to compete when there's all this other like digital world where now brokerages, like for us, we just get e-signatures basically on everything, right? There's a few clients I still get like signatures on. It's a very, very small portion of my book. But again, some people just like to see you in person and sign paperwork still, which again, I'm not going to say is the wrong thing to do, but it's definitely a lot more time consuming to do that.
Well, yeah. And one of the things too is that as you go through these models, if you didn't kind of adapt to all the changing tech to make your job easier, you kind of got left behind because the consumer also changed, right? Where the majority of people now have either been able to do work over email or on their phone. You're going to get a smaller and smaller population of people that want to do it in person or signed app where it's like have a coffee, that sort of day. There's still a small section of those people, especially in the older generations, which is not wrong, but that's not the big cohort of insureds right now, right? So adapting to that change as, let's say, an older brokerage model, it was easier to say, let's kind of sustain the book as we have it. And then when an opportunity comes to sell, we'll discuss what the book price looks like and what makes sense for us as the next stage moving forward. Whereas anybody else that's maybe younger that's coming up and into it has usually joined a team or a brokerage on that kind of growth plan where there's a lot more about not only organic growth, but it's that merger and acquisition side, James, that this episode's all about, which is how do we attract more clients? How do we gain, larger books? How do we retain more clients? How do we service more? And a lot of that is by saying, we can scoop up kind of XYZ brokerage and then, have those clients to kind of maintain moving forward.
So getting into that topic then, maybe from a broker standpoint, like if you've bought if you bought basically a book of business, let's say, Mike, you go out and buy XYZ brokerage, what are some things that you should do on the broker side of things that kind of keep that transition as smooth as possible for the client?
So every brokerage is going to have their own viewpoint on this for sure, right? And how they want to do business as well. I would maybe more aim towards what, as a client, you might want to not only look into, but also maybe ask the questions. Because there's more and more of these mergers and acquisitions coming on the channel, and we're going to see more and more in our space over the coming years. It's not going to stop. It's going to continue. I would suggest just finding out, like, if you really are happy with what your new policy is, and that you always have a choice, right? You don't necessarily, if you've been with one company for 20 or 30 years, which was common back in the day, you would just be with one and be happy with it. You don't necessarily have to stay with that change if you're not happy with it. It might even give you an opportunity to say, I want to start a fresh relationship somewhere else, right? So I think clients sometimes have it where it's like, okay, it's going to be changing hands, and am I going to be in the same position I was before, right? And if you're a relationship person, maybe it's not. So you got to just ask the questions yourself, James. What's important? Is it the relationship? Is it the price? Do you want to put in the effort to kind of reestablish that with the new maybe brokerage that's taken you over, for example, or is it time to look for somebody else? So those are some of those key questions that you'd want to ask yourself during a transition period like that.
I think the big thing too on a broker side is always kind of introducing who you are, because I find a lot of times where I get these mergers or acquisitions from other brokerages is the client almost 9 times out of 10 does not know who the new person is that is in charge of their insurance policy. There's no email, there's no phone call, there's no mail that goes out saying, hello, my name is John or Kim or whoever it might be. Like, we recently have acquired your insurance. Again, just even like a 2-minute phone call. So I find that is a big value add for a lot of clients, because I find when I speak to clients that are having these issues, even if they just got an email stating like who they were, that would suffice. But I find a lot of times that just doesn't happen. And then again, clients go, I have no idea who this person is. I have no loyalty to this person. I don't even know who, like, again, don't know who this person is. I have no relationship with this person. And that kind of tends to have them shop around and go build another relationship, which again, I'm not saying is the wrong thing to do, but I think there's ways of kind of mitigating that from the broker side as much as possible, right? If there was just a little bit of an introduction made prior to them renewing.
Well, you know what? It's a valid point. I've actually just last week, I spoke to someone that I think was going through that experience. They didn't really know how to explain it, but I know that's what was happening, because they basically said, I'm not sure who looks after my stuff now, but there's been some transitions between ownership, and it wasn't maybe fully known to them. They were an older client as well. I remember asking just a few questions about it and kind of having that conversation over the phone. And that was their biggest concern was, do they have to stay? Who are they talking moving forward? What's the actual proper office? There was all those unknowns that happen during that phase. So, I mean, communication is the biggest part, James, as you were mentioning, for both sides.
Yeah, and like I said, I had a client, same thing. He was with an office for like 25 years. Recently, they got bought out. They moved like across the country, and to get a hold of them, one, it's costing him money now because it's long distance, and there's a time change now. So when he's trying to call them, he has to call them on a different time zone because the time's different. So he's like getting a hold of them is like virtually impossible, which again, I think that comes down to our episode yesterday, where again, a big customer service value, right? Like if you're taking over a book of business, there should be some sort of reach out and introduction that says, hey, this is who we are. This is what we do. Kind of a little background story of kind of who they are. And that's really about it. But again, it all comes down to communication, like we said. And if there is no communication, how can there be a new relationship built or any sort of loyalty that stays with them if the communication is lackluster at best?
Yeah, I guess it all depends too on what the new brokerage's idea is, right? So if you're part of that, is the idea to maintain 100% of the clients, or is it to kind of acquire a bunch and then lose some of the process? I mean, that's a different. Everyone's going to have their own business model behind that, but that's definitely a question that you have to ask yourself. That sits in my brain.
I don't think any brokerage goes out and says, I'm going to be purchasing a book of business and I want to lose like half of the business. I think you're not ever going to continue to have 100% of that book of business, but I don't think brokerages game plans are going into buying an office and taking their book and not trying to keep like 80 to 90% of that book, right?
Right. Well, you know what? There's another aspect to this too, which I just was thinking of. So when you go through that transition period from moving from one brokerage to another through like maybe like an acquisition or merger that we're chatting about, if you don't have that same insurance provider, I mean, most of the times you'd hope that all the companies you have match up so that it's maybe an easy transition period for you and the clients. But if you don't, there's that whole element of, do you have to get moved from one insurance company to a next, even though you had an established relationship with the prior company, right?
That's a great point.
So this isn't even necessarily the broker. This, like us as your kind of middleman or your advocate, this is literally the fact that you've been kind of transferred to an alternative representative, but yet the actual underwriting insurance company behind the scenes maybe isn't represented by that next broker.
That's a great point.
As a result, you get moved, but maybe you don't want to. And that's, I think that's a good point for people to know, because you don't necessarily have to move at that point. You can hope you could even find a new broker that has that same insurance partner. So you kind of maintain that long lasting relationship and loyalty that a lot of people do still have value in.
That's a great point that you brought up, because I didn't think about that. But again, not every brokerage and every office is going to have the same contracts with insurance companies. So if your business gets bought by another company and they don't represent that company, or they don't have a contract with your insurance company, that could be, again, another opportunity to go, you know what, like I really like the company that I'm with. I might find another broker that can take me on because that company or that brokerage just doesn't have a contract with insurance company A, right? Which again, sometimes it doesn't happen.
Historically, that was always the case, because going back, when you had a lot of the brick and mortar smaller operations, they wouldn't necessarily have contracts with all of the big players because they just didn't have enough premium volume to kind of warrant that, right? So you would see like a lot of brokerages, and I've seen websites and different things over the years, obviously, to kind of comment on this, but you might only have 4, 5, 6 of those maybe more common broker partners, but there's a lot more than that in our space, right? Some people have 20, 30, whatever they might be, 40. So if you're at 5 or 6 and a client's policy comes up for renewal and it's with one insurance company and it's just higher, they might not have as many options to offer in order to like kind of shop that, as we would say, to move to an alternative company. So I think that might have led to one of the other reasons too, James, why being acquired or merging with another company made sense, because then your whole book would go somewhere else. The clients would have more options, and it hopefully made sense as a bigger picture for both parties.
Yeah, there's a pro and con to that, right? Like if you're a bigger office and have more contracts, you're buying a smaller office that had less contracts. Well, now those clients are having more options to move their business around, which again is normally the case, because again, if you're acquiring another office, usually you have the funds, you usually have the connections to have more contracts. The smaller places usually don't have all the contracts that bigger places have. But again, there are those times where you just don't have certain contracts, where a smaller office might have a smaller book, right? Or a smaller contract. There's small mutual companies that don't like to deal with big corporations because, again, the volume that they want is not what a big corporation has, right? If you're rating millions and millions of dollars a year, that might not be what a smaller mutual company might want, right? They might want like a few $100,000 a year from a company, right? So that's kind of the only time I ever see it, is with the smaller mutual companies or smaller insurance companies when you move over to a big office. But again, I would say most times it is a benefit to the client, because again, then they're going to have more options normally to have it shopped on renewal if it needs to be.
Yeah. The one thing I will point out though too, for some, because I know there's always people out there that have really valued the long-standing loyalty, is some people still want that insurance company they've been with for a long time, because there's maybe a belief that the longer you've been there, the better claims experience you get. I'm not sure if that always holds true, or if that's just kind of a general rule of thumb that you'll get better results. But ultimately, the claims experience is supposed to be basically the same regardless of, your loyalty, obviously, because the actual coverages on the policy are what deems the types of payouts and what's actually covered in the event, right? But I know for when I first got into the business, that was always a big talking point, right? That there was like that underlying, maybe you'll get better service or whatnot if you needed it. So that some people still view that the same way, James. I know for sure. Some of the older clients as well, right? They're saying, I want to stay with them because I've been with them so long. And if something does happen, I don't kind of want to ruffle the feathers sort of thing and have to start over with a new provider again.
I think another big topping point too is during these acquisitions. I think acquisitions are always a great time, again, to introduce yourself as the broker, but also to introduce yourself as the client. And again, ask questions that you may ask the old broker or the old office about, and possibly even review your policy again. Because again, working with someone new, building that relationship, you have that time to kind of go over a policy with them and kind of see how they deal with things, how they explain stuff to you as the consumer, right? So I think that's another great time to kind of make sure you schedule a meeting with them and go over the policy, see what they really think is important on policies compared to your old office, see how they explain stuff, see what they really hold importance to or recommend on your policy, right? Because again, every broker is going to have their little pinpoints. I know that I don't sell insurance the same way Mike sells insurance. I know that I bring up stuff that Mike doesn't bring up, and vice versa. So it's not always going to be the same. So this is a perfect opportunity to kind of, like I said, kind of start laying those foundational bricks on a new relationship. And then again, I'm not saying every relationship has to work out, because there's sometimes that when you move on to someone new, it doesn't always work out. So you kind of start laying that foundation and go, you know what, like this, I might want to look elsewhere. And then again, you kind of make that decision and move on if you need to, or again, build that foundation from the ground up and again, have a new relationship that you have moving forward.
Yeah. There's definitely opportunity during that phase. Mergers in general, coming together with other brokerages, always seems like a strength move. Because you're obviously, amalgamating team members and clients and contracts and a few things to obviously provide more services to what you already have. I do have some concerns long term, as maybe a general comment. Whereas as more of this stuff happens, there becomes less of that kind of competition, because there's more and more of the same partners offering the same types of company options available. And you could argue that no, that's going to make for, more service and more ability for the client. But as more of that stuff, more of that amalgamation kind of happens between offices, you kind of get put into a spot where you don't necessarily know if your business is always valued, James. Right? I mean, if you're working for someone monstrous, how do you know if they actually truly care? And that's going to go back to who your personal representative is, right? So there are brokerages like ourselves, as well as individual brokers like us individually, that I think stem more towards that service side, where it's, have that personal relationship and reach out. Some of the other models out there, which is more of like the, there's a bunch of different departments and you all collectively work together, but you all do very different things throughout the day. So you don't necessarily have that same relationship. It'll be interesting to see how that flourishes over the years. If people kind of go back to saying, I want to speak to my same person every day or every time I want to call in, whenever that is, versus the calling into like a call center type queue idea, where it's just, you have that 15, 20 minute, half an hour wait time, and then you get someone different. So I think that's my only concern with some of the amalgamation on maybe a massive scale, is that it turns into more of this is the landscape and you have to play within it, versus that kind of real time service where if you lose clients, it actually hurts the book and everything else along with it.
Yeah. Personally, as a consumer myself, I don't think personally anyone really wants that call center mentality, because again, you're on the phone. People don't really know who you are. There's no personability behind it, right? I feel like when we have these mergers and acquisitions, we almost, again, it's about growth, right? And there's a time where you grow and you grow and you grow. And again, like if you want to grow, those things the automation has to happen, right? But I do feel like a lot of people that I've talked to over the years, a big reason why they come to myself or Mike is that we know people personally. Like when people call, I know, and we said this yesterday, I know exactly who's calling. I know kind of what their background is. It's not like I'm like their mother or anything, and I know everything about them, but I know very basic information about them and kind of what they're doing. Oh, their kids play soccer? Great. Their kids do this? Awesome, right? So there's pros and cons to it 100%. I think it's always important to review your options. And again, like every relationship is not going to be the perfect one for you. And like I said, going back to the whole call center thing, I think insurance is always going to be a personal thing. And the second that you take the personability out of it and you become more of a call center, I think that really hurts a book of business moving long term.
Yeah. Automation in tech is certainly super important in making things quicker on the experience. And there's certain aspects of all industries, including insurance, and I'll say also like mortgage brokers as well, which operate in a very different but same space, where we can use tech and automation to hopefully streamline the process, the buying process, the quoting process, all of the things that we do on the day to day. But I truly believe that there's still a lot of value in the human experience where you have someone that you actually trust versus just plugging it in online into like a pre-fillable form, for example, and it gives you a price. Only because if we fully go that way and everything is automated, and that's really long term. I hope that doesn't happen. But if that was ever the case, you would start seeing where at that point you might as well just have a government insurance, right? Where it's basically just you're buying it from whatever the prefabbed rate is that this vehicle and this driver has, right? That some provinces have. I mean, Ontario operates in a very different way, and it's all through the different channels where you can buy it. It's not obviously government, but I don't know if automation and tech on that front is the best, because you still want to have that choice and ability and have someone kind of looking after your stuff. That's my personal opinion, but obviously being an insurance broker myself and being in this industry is for a while now, this is kind of my career as well. So I always aim towards saying, hey, how do I make myself the most valuable insurance person that I know, then that everyone hopefully can reach out to as well, right? It's kind of building that brand yourself, James, of saying, if you were going to buy insurance, who would it be? And my goal is to say, everyone just thinks about Mike, right? In one way or another.
And I think one thing, and there's probably a lot of other factors that people don't think about, but I think one thing that a lot of people kind of overlook is that if we go this whole technology streamline kind of process, and we've already kind of seen it, we're losing these people skills that we've had before. And we talked about it yesterday, and you actually made a great point about it. 20 or 30 years ago, you'd be sitting at your kitchen, your dining room table, and someone would knock on the door. Everyone would get up and go see who it is. Nowadays, no one wants to do that because everyone's scared to talk to people in person. So with all this technology that we're releasing into every industry, there's no more face-to-face. There's no more... Like, how many times do you call people and you leave a message and then they text you back and they only want to do it through text or email? We're kind of almost losing those people skills where people don't want to talk over the phone. People don't want to talk face-to-face. They only want a text message or they want to email stuff because they never built those skills, because over time, technology has replaced those skills with a screen.
Right. Well, and it's interesting you say that, because personally, I love phone calls. I love voice communication. You can get a lot more work done in a much quicker point of time, but you can also have those questions and banter to kind of really get an honest communication within minutes, right? The one thing that I've never been a huge fan of is that you can miss a lot of context in text or emails. You also don't get the tone, right? Like, people always say, like, you don't necessarily know, and there's always people out there that are really nice in person, be it the tone of their emails is horrendous, or so it seems. And it's not even because they're mad or angry, it's just that's how they write emails. So there's a lot of that process that's very simple for people, and I understand that as well, which is, hey, how do we make the process simpler, which is text or email, because that's what people can do while at work or while anywhere else. They don't have to physically talk, which some people don't have the time to do it. But at the same time, James, you're right. It's sort of changed the landscape, because now there's a massive cohort of people, and I guess the next generation, probably under us, that only wants to do it that way, right? So the whole way we communicate as brokers is going to have to change as well, just to adapt to how they want to be communicated with, because it's not a small group of people that do that.
No, it's not. And again, I'm a great example of that. Like, my emails and texts are just regular. Like, you don't really see any tone in it. But when you talk to me on the phone, I'm very passionate about what I do. And you can tell, and people telling me that all the time, is that they can see that I really enjoy what I do because I have a lot of passion when I talk to people about insurance. So that's a big difference, where we're going to this new world where, like I said, everyone likes to email and text. I'm not saying there's anything wrong with it, but we've gone away from calling and meeting in person to do this stuff, which again, it's a lot quicker. It streamlines things. But again, there's sometimes things get missed because you're just emailing and texting and you're not actually physically talking to someone. And that has been a big change. And it's going to continue to be a big change because even now I'm finding, even when you do call someone, even voicemails now, like how many times do people call you and they don't leave a voicemail? And it's like, well, I don't really know like what the call is about. Like, I don't know who this person is. I have no context to it. Right. So even like voicemails have become almost like an old term.
I would say they're almost obsolete.
Yeah.
I leave quite a few voicemails with respect to following up or cold calls or whatever it might be, just to show my interest. But I find that my viewpoint on that, again, being in sales, is a little bit different than someone that's not in sales, because I know lots of people that will kind of like, delete the notification literally just to get rid of it off their phone. But if it's more than, 15, 30 seconds, if it's a minute long voicemail, you're probably not even going to get the full thing listened to before they delete it. So it's just our patience as people as well, and our attention span in general, right? So things have to be more concise. And if we're going to continue using the phone, it's got to be quicker for people that don't want to either return calls or even listen to voicemails in general. It's got to be almost as quick and efficient as what a text is.
Yeah. But again, that's just the world we live in. Again, I grew up with the respect to kind of leave people voicemails and let people know why I'm calling and whatnot. And again, we've just kind of, the world's changed a lot where I get clients all the time that will call and call and call and call. And like, I'll be on another call and I text them and I go, listen, I got your call the first time. If it's important, just leave me a message, but I'm with another client. But again, that voicemail never comes. It's call and call and call and call and call. And it's like, okay, like after the second call, like I'm obviously busy. Like leave a voicemail and I'll get back to you. But again,
right.
That life, and again, it even goes to emails. How many times do you send emails and again, that they're looking at it, but they just delete it or they don't respond back to you? It's, again, easy ways of kind of, I guess, dodging that rejection. You know what I mean? I don't want to deal with this, so I'm just either going to delete it or not respond back to it.
Right. Yeah, there's definitely business has definitely changed with respect to how we communicate with clients. That's for sure.
Yep. What would your takeaway be from this episode?
I would say that my biggest thing is that if anybody's wondering or inquiring on how the landscape's going to shake up, I think these types of brokerage mergers and acquisitions are going to continue for sure. I don't see that pattern changing. Canadian Underwriter, the articles that we've read and that kind of get posted pretty continuously tend to trend towards this stuff happening not only as often as by now, but even more because, the bigger players obviously have more capital. So that's going to be a constant trend. It's not just a short-term thing. So I guess my takeaway would be for clients wondering, what happens during this? What should we do? Is basically reach out if that sort of thing is happening. Maybe not wait to be reactive, James, but be proactive in the matter. And if you do get through an opportunity or maybe a letter or a notice saying that you're going to be going through a change of an insurance company or a brokerage, wherever it might be, is it's giving you the opportunity to then either let your stuff renew as is and continue on with maybe a new established relationship through this merger, or it gives you the opportunity to look for an alternative representation. So my biggest point to people would say, it's not necessarily scary. You're not locked into anything. You don't have to just transfer because that's how it works. You do have options available. So it's giving people a little bit of maybe peace of mind to reach out to maybe new people if you feel concerned, or just look for other options because you're not strapped to having to stay to where you're at.
I'm going to piggyback off that and kind of go off the same thing. These kind of mergers and acquisitions are a perfect time and perfect opportunity to start building that new relationship. And again, scheduling a time to review your policy and making sure how they conduct business is the way that you want your insurance represented. And again, I'm not saying there's a a right or wrong answer here. Sometimes that person's great and you get along with them and you trust them. And other times you go, you know what? Like, this is probably time that I look elsewhere. I've been with this company for 30 years and it's time to move on from them, right? So I would just say take the opportunity as it is, introduce yourself as the client, introduce yourself as the broker. And again, just making sure that people know who you are. And introductions and communication are very key during these times, because again, the last thing you want is not to introduce yourself at all, because realistically that just opens up to consumers just not knowing who you are. There's zero loyalty built, and more times than others, clients end up leaving because of that.
If anybody ever has that sort of examples too, feel free to reach out to us if you're going through that. I talk to people all the time that are going through similar situations where they're not sure, maybe the unknowns, and they want to pick my brain or ask questions. We're always available to give not only as much insight and knowledge as we can, but also answer questions without necessarily always even, requiring that insurance moving forward. If you just need to pick a brain and then decide, we're here to chat with people.
100%. Like I said, we're here. I always say we're not salespeople, we are educators. So at the end of the day, if we can come out of a conversation, you have a little more education or knowledge than we did prior, me and Mike have done our jobs. So that's what we pride ourselves on, and that's what we'll continue to provide to our clients and, again, potential clients.
Yeah, so I don't think there's anything else to wrap up today with.
Nope. This episode will go out next week. We're back on track with recording and getting episodes out, so we'll see this go out on the 25th of July. I cannot believe that we're already at the end of July. It's insane, but summer is moving quickly.
Yeah, it is. So we appreciate everyone listening. We'll be back next week again with another episode. If there's anything that maybe we haven't talked about in the past year, because we've been doing this pretty consistently now, which is amazing. But if there are specific topics people do want to hear from or chat about, this is something that we always are open to, especially because we do this every day. So there's things that we obviously miss that might be maybe more common questions that we overlook. We're always open to putting together an episode based on that information. So by all means, reach out to us. We're both on socials. At some point, we'll have to, I think people know that kind of stuff, but if not, we can always do more of that at some point.
And a little bit of kind of news as well for us. We are going to be taking a small break Labor Day week. So we're not going to be posting a episode the week before Labor Day. So I believe that will be the 29th. There won't be an episode on the 29th, and there won't be an episode on the 5th either. So the last episode of summer will be, I guess, the 22nd of August, and then we'll be back the 12th of September. Just kind of let ourselves recharge. Like, we've basically been doing this at that point. It will be almost like 4 months straight, because actually even longer that, because we really haven't had a break that much. So we just kind of needed a little bit of a break to reset, recharge, kind of get some more ideas flowing, and kind of move on to the final part of 2023. So
yeah, so that wraps up everything for today. Thank you all very much for listening again, tuning in, and we will check you next week on the Broker Breakdown.